Welcome back to the Deep Dive.
Hey, everyone.
Big shout out to our friends over at the Stock Explorers podcast.
Yes.
We heard you were kind of curious about crypto, but
Mhm.
maybe a little hesitant to just jump headfirst into the volatility of Bitcoin
Right.
or Ethereum.
Understandably. What's fascinating is you don't have to choose between that wild ride of crypto and sitting on the sidelines. There's this whole category of established companies, ones you probably already know and use,
Okay.
that offer a way to tap into the growth of crypto without the same level of risk.
Interesting. Okay, so tell me more about these so-called crypto-adjacent companies. What are we talking about here?
Think of it this way. Instead of investing directly in gold during a gold rush,
Hmm.
you could invest in the companies that provide the picks and shovels
Right.
and the other essential equipment. These companies benefit indirectly from the gold rush, even if they don't mine the gold themselves.
Oh, okay.
You know?
I see where you're going with this. So these crypto-adjacent companies are like the picks and shovels of the digital gold rush.
Exactly.
They provide the infrastructure, the on-ramps, the services
Yeah,
that the crypto world needs to function and grow.
exactly. And today we're going to deep dive into three of these companies: PayPal, Block, formerly Square, and Coinbase,
Okay.
to understand how they're connected to crypto and what makes them compelling investment opportunities.
Sounds good.
Yeah.
Let's start with PayPal. I mean, everyone knows PayPal, right?
Yeah.
They're synonymous with online payments.
Yes. PayPal's a giant in the payment space with a staggering 432 million active accounts.
Wow.
To put that into perspective,
Yeah.
they processed over $422 billion in payments just in the third quarter of 2024 alone.
Wow, those are some serious numbers. But how does this tie into crypto?
Well, PayPal has cleverly integrated crypto buying and selling directly into its platform. They've partnered with Paxos, a regulated financial institution, to offer this service seamlessly. It's a brilliant move. They're leveraging their massive user base and trusted brand to make crypto more accessible to the average person.
So instead of having to set up an account on a separate crypto exchange,
Right.
you can buy and sell Bitcoin or Ethereum right within the PayPal app you already use.
Precisely. And they've gone a step further by launching their own stablecoin called PYUSD.
Okay, pause for a second. Can you explain what a stablecoin is and why PayPal would want to create one?
Sure. One of the biggest hurdles for crypto adoption is its notorious volatility.
Right.
Stablecoins aim to solve this problem by pegging their value to a more stable asset like the US dollar. So PYUSD is designed to maintain a value of $1, making it a more predictable option for everyday transactions.
Interesting. So PayPal is betting that people will want to use crypto for things like buying coffee or paying rent, but they need a stable option that won't fluctuate wildly in value.
Exactly. But it's not a guaranteed win. PYUSD faces stiff competition from other stablecoins and regulatory hurdles that could hinder its widespread adoption.
Right. That's fair. But even if their stablecoin doesn't become the next Bitcoin, PayPal is still in a really good position to benefit from the growth of crypto.
Mhm.
Their core business is strong. They reported 6% revenue growth and even stronger transaction margin dollar growth in the last quarter.
Transaction margin dollar growth essentially means they're making more money from each transaction,
Right.
which indicates that their crypto integration is likely contributing to increased user engagement and revenue.
So for the investor who wants exposure to the crypto space but prefers a less volatile option, PayPal offers a way to capitalize on the trend indirectly.
Now let's shift gears to Block. Unlike PayPal, they have this dual focus serving both individual consumers and businesses.
Right. I use their Cash App all the time to send money to friends, and I see those little white Square card readers everywhere.
Their mission is to provide financial tools for everyday people and businesses.
Okay. With Cash App, individuals can buy, sell, and even send Bitcoin directly to other users.
That's a key difference from PayPal, right?
Yes.
With PayPal, you're essentially buying and selling crypto from PayPal itself, whereas with Cash App, you can actually transact directly with other individuals.
You got it. And Block isn't just facilitating crypto transactions. They're putting their money where their mouth is by holding Bitcoin on their balance sheet.
So Block has some skin in the game.
Yes,
Their success is more directly tied to the performance of Bitcoin compared to PayPal.
precisely. But it's not just about Cash App. Their Square ecosystem, which provides point-of-sale systems and other services for businesses, also stands to benefit as more merchants begin accepting crypto payments.
That makes sense. The more ways that people can use crypto in their daily lives, the more demand there will be,
Yeah.
which ultimately drives up its value. So it sounds like Block is making some strategic moves to position themselves at the forefront of this trend. Absolutely. They're focusing on building a comprehensive financial ecosystem where crypto is seamlessly integrated into both personal and business transactions. This strategy is reflected in their financials. Cash App alone saw 21% year-over-year growth in gross profit last quarter.
So both PayPal and Block offer a way to play the crypto space without investing directly in cryptocurrencies. How do they compare in terms of like risk and reward?
I'd say PayPal is the more conservative bet.
Mhm.
Their core business is strong and less reliant on the ups and downs of the crypto market. Block, on the other hand, has more direct exposure through its Bitcoin holdings and Cash App transactions.
Okay, so PayPal for the cautious investor, Block for those willing to take on a bit more risk. Now, what about Coinbase? I know they're a big name in the crypto world, but they seem different from PayPal and Block.
That's because Coinbase is a pure play crypto company.
Okay.
Their entire business model revolves around providing a platform for buying, selling, and trading cryptocurrencies. They make money through transaction fees on every trade that happens on their platform.
So their success hinges entirely on the popularity and adoption of cryptocurrencies. If the crypto market booms, Coinbase booms.
Right.
If it crashes.
They're in for a rough ride. Unlike PayPal and Block, which have diversified revenue streams,
Right.
Coinbase's fortunes are directly tied to the volatile crypto market.
That sounds like a high-stakes bet. What are some of the other factors investors should consider when evaluating Coinbase?
Regulation is a big one. The regulatory landscape for crypto is still evolving, and Coinbase is under intense scrutiny from governments worldwide.
Right.
Any new regulations could significantly impact their operations and profitability.
So regulatory uncertainty adds another layer of risk for Coinbase investors.
Exactly. But for those who believe strongly in the long-term potential of crypto and are comfortable with higher risk, Coinbase offers the most direct exposure to the growth of the crypto market.
All right, so we've covered three very different companies that all touch the crypto world in their own way. It's fascinating to see how this new technology is shaking up the financial landscape and creating opportunities for investors of all risk appetites.
It is. What stands out to you so far? Do any of these companies particularly pique your interest?
I'm really intrigued by Block's Bankr-based strategy. It seems like they're going beyond just buying and selling crypto and are building a whole ecosystem that integrates crypto into everyday financial lives.
That's a keen observation. Their strategy speaks to their belief in the long-term potential of crypto to disrupt traditional financial systems.
It makes me wonder, are they just reacting to trends or truly shaping the future of finance?
That's a great question, and I think the answer might lie in how successfully they can convert their massive user base into active participants in their crypto ecosystem.
This is getting really interesting. But before we get too deep into Block's strategy, let's take a step back and compare all three companies, PayPal, Block, and Coinbase, side by side. How do they stack up in terms of their risk-reward profiles?
Great question. That's where we'll pick up after a quick break.
All right, so we've got PayPal dipping their toes into the crypto waters, Block diving in headfirst with Bitcoin on their balance sheet, and Coinbase riding the crypto wave as a pure play exchange.
If we visualize them on this risk-reward spectrum, PayPal sits on the lower end.
Okay.
They offer a way to benefit from the growth of crypto without being overly exposed to its volatility.
Makes sense. Their core business is already so massive that crypto is more of a supplemental growth driver for them.
Block occupies the middle ground. They have more direct exposure through Cash App and their Bitcoin holdings, which means higher potential gains, but also higher potential losses.
And then there's Coinbase sitting at the high end of the spectrum. They're all in on crypto, so their fate is directly tied to the market's performance.
Exactly. Their success depends heavily on the continued adoption of cryptocurrencies and a favorable regulatory environment.
But isn't the adoption of digital payments already pretty widespread? What specific advantages do these crypto-adjacent companies offer in a landscape that's already crowded with payment options?
That's a great question. While digital payments are common, these companies are pushing the boundaries in a few key ways. PayPal is leveraging its existing infrastructure and user base to make crypto accessible to a wider audience.
And Block is focused on empowering individuals with financial tools, including the ability to use Bitcoin for peer-to-peer transactions.
Precisely. They're not just facilitating crypto transactions. They're building an ecosystem where crypto is integrated into everyday financial activities.
So it's not just about buying and holding Bitcoin. It's about using it to send money to friends, pay for goods and services, and even manage your investments.
And Coinbase, as the leading crypto exchange, provides a platform for more advanced trading and investment strategies. They're catering to the crypto enthusiasts who want to explore the full potential of this emerging asset class.
Okay, I'm starting to see the bigger picture here. These companies aren't just reacting to the rise of crypto. They're actively shaping its future by making it more accessible, usable, and integrated into our financial lives.
It's fascinating to witness how these companies, each with its unique approach, are contributing to the evolution of finance.
But their success isn't guaranteed. You mentioned regulation earlier. How big of a factor is that in determining the winners and losers in this space?
Regulation is a critical factor. Governments around the world are still grappling with how to classify and regulate cryptocurrencies, and their decisions will have a significant impact on these companies.
Too much regulation could stifle innovation and slow down adoption. But too little could create a Wild West environment rife with scams and instability. It's a delicate balance.
Absolutely. The regulatory landscape is constantly evolving, and investors need to pay close attention to how it unfolds. Clear and consistent regulations could boost confidence in the crypto market and attract more institutional investors, which would benefit all these companies.
On the other hand, heavy-handed regulations could create barriers to entry-limit innovation and even push crypto activity underground, which wouldn't be good for anyone.
Exactly. It's a complex issue with no easy answers, but it's something that investors need to factor into their decision-making process.
Beyond regulation, what are some of the other key drivers that will determine the success of these companies?
Well, the overall health of the crypto market is obviously crucial. If Bitcoin and Ethereum continue to gain value and attract more investors, that will create a tailwind for all these companies.
But if the crypto market takes a downturn, as we've seen in the past, these companies will feel the pain as well.
Certainly, their stock prices are likely to be correlated to the broader crypto market, especially for a company like Coinbase, whose revenue is directly tied to trading volume.
So even though these companies offer a less volatile way to play the crypto space, investors still need to be aware of the inherent risks associated with the underlying asset class.
Absolutely. It's important to remember that the crypto market is still relatively young and prone to significant price swings.
Okay, so we've talked about regulation and the health of the crypto market. Are there any other factors that investors should be aware of?
One crucial factor is technological innovation. The crypto space is constantly evolving, with new technologies and applications emerging all the time.
Right, like DeFi NFTs and all sorts of other acronyms. I'm still trying to wrap my head around. How do these innovations impact companies like PayPal, Block, and Coinbase?
These companies need to stay ahead of the curve and adapt to these new developments. They need to constantly innovate and find ways to integrate these new technologies into their platforms to remain competitive.
So it's not enough for them to just offer basic buying and selling of Bitcoin and Ethereum.
Not if they want to capture the full potential of this rapidly growing market. They need to offer a wide range of products and services that cater to the evolving needs of crypto users.
That makes sense. The crypto landscape is constantly changing, and these companies need to be agile and adaptable to thrive in this environment.
Precisely. The companies that are most successful will be the ones that can anticipate and respond to these changes effectively.
All right, we've covered a lot of ground here. We've explored the unique ways in which PayPal, Block, and Coinbase are tapping into the crypto world, analyze their risk-reward profiles, and discuss the key drivers that will shape their success. What's the main takeaway you want listeners to remember as they consider investing in this space?
I think the most important thing is to approach this with a long-term perspective and to remember that this is a dynamic and evolving market.
So we shouldn't expect to, get rich quick with these crypto-adjacent stocks.
It's tempting to think about those quick gains, especially in a market as buzzy as crypto, but the real opportunity here lies in understanding the long-term potential of these companies and their role in shaping the future of finance.
That's a good point.
Yeah.
We're not just talking about riding a short-term trend here. We're talking about a fundamental shift in how we think about money and transactions.
Exactly. And these companies, PayPal, Block, Coinbase, they're all betting on a future where crypto plays a much bigger role than it does today.
But as you mentioned, a lot depends on how governments decide to regulate this space. It's like the Wild West out there right now.
Yeah, the regulatory landscape is definitely a key factor to watch. Clear and consistent regulations could provide more certainty for investors and businesses, which could fuel further growth in the crypto market.
But overly restrictive regulations could have the opposite effect, right?
For sure.
It could stifle innovation and drive activity underground.
Absolutely. Finding the right balance is crucial. And it's not just about government regulation. We also need to consider the role of traditional financial institutions.
You mean like the banks and credit card
Oh,
companies?
yeah. Yeah.
How are they reacting to this whole crypto thing?
It's a mixed bag.
Okay.
Some are embracing it, exploring blockchain technology, and offering crypto-related services to their customers.
I guess they see the writing on the wall. They can't just ignore this massive shift that's happening.
Others are taking a more cautious approach, waiting to see how things play out before making any major moves.
And then there are those who just see crypto as a threat
Right.
to their existing business models and are actively lobbying against it.
It's a fascinating dynamic. It's like watching a slow-motion collision between the old guard and the disruptors.
So who do you think will win this battle for the future of finance?
You know, it's probably not a winner-take-all scenario. I think the most likely outcome is a hybrid system
Okay,
where crypto and traditional finance coexist and even complement each other.
that makes sense.
Oh.
It's not about crypto replacing everything. It's about finding ways to integrate it into our existing systems and leverage its unique benefits.
Exactly. Crypto offers advantages like transparency, security, and lower transaction costs. Traditional finance brings its infrastructure, experience, and regulatory frameworks to the table. A convergence of the two could create a more efficient and inclusive financial system.
So for our Stock Explorers listeners who are interested in exploring this space, what should they do? Should they just buy some Bitcoin and call it a day?
Investing directly in cryptocurrencies can be exciting, but it also carries a high level of risk. For those who prefer a more stable approach, these crypto-adjacent companies offer a way to participate in the growth of the crypto market without the same volatility.
But as we've discussed, even these companies come with their own risks and considerations. Investors need to do their research, understand the business models and strategies of each company, and carefully assess their own risk tolerance.
Absolutely. And it's important to remember that this is a long-term game. The crypto market is still in its early stages, and there will be bumps along the way.
So patience and a willingness to ride out the inevitable ups and downs are key.
Well said. And for those who are willing to embrace the challenges and opportunities of this emerging market, the potential rewards could be significant.
This has been a fascinating deep dive into the world of crypto-adjacent stocks. We've explored 3 very different companies, PayPal, Block, and Coinbase, and learned how they're each navigating this complex and rapidly evolving landscape.
What's fascinating to me is how these companies are not just reacting to the rise of crypto, but actively shaping its future. Their success or failure will have a ripple effect across the entire financial industry.
It makes you wonder which of these companies will emerge as the true leaders in this new era of finance. Who will be the ones writing the next chapter in this story?
That's a question for all of you listening to Ponder. Do your research, explore these companies, and decide for yourselves who you think is best positioned to capture the value of the crypto revolution.
Excellent advice. Thanks for joining us on this deep dive. We hope you've gained a better understanding of the crypto-adjacent landscape and the investment opportunities it presents.
And as always, remember to stay curious, keep learning, and make informed decisions that align with your own financial goals.
Thanks for diving deep with us. Remember to like, subscribe, and hit that notification bell for more fascinating deep dives into the topics you care